market's been very much range bound. Obviously, we're into August now. It's volumes are very low, ranges are very narrow, so not a great deal going on. Although at the moment, the dollar's a wee bit bid going into non-farm payroll. Euros down at 118, 1804, yen's at 109.80. So we'll see how it all pans out and the data pans out. So going forward, really, we've had Richard Clarida this week, sort of giving the dollar a bit of a spike. Spike's a bit of an overstatement of the situation, but really talking about the Fed going to be moving probably by 2023, still a long way away, but things balancing out in 2022 and rate hikes coming through in 2023. So that's more than is normally expected. And let me just see if we're off and running. See if it's connected. Yeah, there we go. I'll just check my Facebook colleagues. Yeah, it's off and running. There we go. So what was I saying? Yeah, Richard Clarida, really, the vice chair of the Fed, giving the dollar a bit of a bid on this idea that the hawkish tilt continues. I suppose you could argue it had a bit of a hawkish tilt from the Bank of England as well yesterday, but again, it's fairly long term in sort of the next 12 to 14 month time frame. So really, I say it's August, not a great deal going on. Gideon's asking about gold. We'll come to gold in a minute. Gideon, gold sort of really on a higher time frame. We'll look at the charts in a minute once the data's out, but Gideon, but really it needs to break over 1835. It's going to go higher. Obviously this week we've been doing anything else. We've moved down quite significantly on the comments from Clarida, and we were down again this morning under that support we'd got earlier yesterday, and also again this morning at 1798. Let me just bring the charts up. What we're doing, I'm going to bring just minimize me. There we go. So this is gold on the 1 hour chart. See, we've been sort of very much this idea about range bound this week, certainly, but gold's lipped down or tipped down just before. This is the 1 hour chart, just before we got the NFP data into another new low for the week here, around about 1793. So hang on, let me just turn myself off. That's all right. So I hear myself in stereo. I just want to see. Mustafa, good morning. Ajay, good morning. I can't share you guys on Facebook. I can't share your questions, unfortunately. But anyway, gold's ticked down. So we'll come back to this, Gideon, if you don't mind, because really, as Adi says, what's expected? Well, what's expected in the numbers today? There's a big wide variance, as there is most months, but this is the July data. There's a huge variance. So it's always one of those things you say, well, does anybody really know? These market analysts just have to put this out for this for the sake of it, because that's what they're told to do in the bank. So here, this is the let's go back. This is the 15-minute. I need to mute myself. I can hear myself in echo here, which is a bit weird, but that's not that. That's off. So this is euro been going down. We've been testing 1800 all day today. So what's expected, as Addy's saying here? Well, 870,000 on the Reuters poll, and the Bloomberg poll's about the same thing. That's a consensus. But we got this massive variance. We've got a low of 350,000 today and a high of 1.6 million. So there's a huge range of potential outcomes today. A big beat, a strong number would suggest that the Fed might taper earlier, or might talk about tapering earlier, as early as the this big event they've got in the middle of nowhere in the wilds of Western America in Jackson Hole at the end of the month, end of March, end of August. And then the key one is really the Fed meeting in September. So that's what everybody's looking is the key sort of pivot for the rest of the year and into 2022, the September meeting of the Fed. Remember, markets get very quiet this time of the year, both, as you already said, on volumes and distances the markets will travel, and ranges the markets will travel. But the trends remain very much set. The equity markets are still at all-time highs and pushing higher, and there's no sign of that abating. Any dips, they've been bought. And bought quite aggressively. This is the USA 500. Got the daily time frame. You see, this just keeps going. Every time we've gone under this is the 20-day our 21 EMA. Every time we've gone under it, it's only been for a day or two here, even all the way back at the beginning of the year, February. So it's been bought very aggressively. The highs keep getting higher. The lows keep getting higher. So the trend continues. Dips are bought. And here we are into August, and we're at 4,420 at the moment. So equity markets keep bid. All the story about the yield being very, very low, which it is. I mean, we've ticked up a wee bit today. The 10-year Treasuries was 124 when I last looked. We'd been as low as 112 this week, 112.70 as the ADP number came, and that was a big disappointment on Wednesday. But remember, the connection between the ADP and the NFP has been broken. It's been broken for quite a while. So just because ADP missed significantly on Wednesday, 330,000 as opposed to 700,000, which was expected, doesn't necessarily mean that that's going to follow through for NFP. One caveat or one comment I would say about NFP today is that the week that the Bureau of Labour Statistics do their calculation for NFP for today, it was a very weak week for the unemployment claims. So unemployment claims missed quite significantly on the week that did the collection of the data. So that might air things to the downside. But 870,000 is the key number. The other key numbers you want to be looking out for is unemployment is expected to tick down to 5.7%. The main the main U3 measure, 5.7%. And earnings 3.8% from 3.6% last year, and the month-on-month earnings remain relatively robust at 0.3%. So 0.3% for earnings on a monthly basis. Annualized basis, 3.8% is what's expected, and the headline number around the 870,000, 890,000, possibly 900,000. But we've had big misses this year, haven't we? So let's see how all that pans out. This is the equity markets. Guys, I'll get to all your analysis, Gup and others, my friends, once the numbers have come out, if you don't mind. So CAD Swiss, we'll have a look at it in a minute. And we'll come back to your questions. What will happen if data is negative or mixed? Thanks, says Addy. If the euro dollar, if the data is strong, it should support the dollar. So let's have a look. But that's the theory, and obviously markets are not theoretical; they're not logical. So let's see. There's bound to be a bit of volatility because there always is on non-farm payroll day. Let's just take this down to the 5-minute chart. So this has been short all morning, really, and all day on the 5. This is euro dollar on the 5 minute. So we've been down. We've been testing this 118 zone, which is down here. It's sort of inevitable. Perhaps we might spike through that. In fact, we have spiked through that. That's 117.99.6 in the last couple of minutes. So not unsurprisingly, you'd expect this level here to get spiked at potentially 108.7 on the 5-minute chart. Conversely, if there's a big miss for the number as well, it might not be as impactful as you think, because the key thing is what the central bank thinks. And Clarida sort of signalled, remember, he's a vice chair and he's in charge of the putting policy together. So that the two vice chairs and Chair Powell, they're the key centrists, and they sit very much in the centre and have been erring on the dovish side. So for Clarida to turn somewhat hawkish this week has been seen as quite a hawkish stance for the Fed. But again, we'll see what the data says in a wee while. Let me just have a look at who's on Facebook. No more. Let me just refresh Facebook because it doesn't update the questions on Facebook, guys. So excuse me a minute. So no, it's just Mustafa Nade. So good afternoon to you, chaps and ladies. Where am I? Let's go back. That's me. So we'll come to CAD Swiss. We'll come to Euro in a minute. And same with the comments I've just said about the Euro, Khan. It'll be the same thing. The sterling is relatively well bid against the dollar. It's sort of hanging around this 139. Here we are, 139 all week. Not a great deal of motion for the first week of August, which is what you expect. But you can see it's not biased to the upside. But 139 needs to hold for us to take off. We couldn't get to 140 as we closed out July. We'd had a strong run into the end of July, but we couldn't get to that key 140 level. We topped out here to around 139.80. So that's your upside. Supports here. And obviously this week, that support there at that 138.50 is a key level. But as far as this week's concerned, we've been as low as 138.76. So there's the levels to look for. And again, dollar CAD, Saj, we'll come to and have a look at them as the data comes out and see how it's crunched. But remember, 5.74 unemployment rate. The other thing I was going to say, the U6, the wider measure of unemployment in the United States is expected to go back to the key 10% level from 9.8%. So it just shows you the potential sluggishness of the. Let's go back to the euro. There we go. The data must have breached. There we go. The data's come out. Euros. This is pound. Sorry, this is sterling crashing under 138. So let's have a quick look at the data as it's come out. So it's a huge, well, not huge, but a significant beat. We've come in at 943,000. Earnings are better than expected, 0.4%. Participation rate, which is what I was just about to talk about, has ticked up as well. So there's more people in the market and there's more people participating. That's gone up to 61.7%. The U6 unemployment level I was just talking about, worried about it going to 10%, has actually dipped down again. So the wider measure of unemployment has gone down as well. So it's booked the worries about the unemployment claims week. It's at 9.2%. And the wider, more important unemployment rate is at 5.4%, much better than expected. So 943,000 for the headline. 5.4% for the actual unemployment rate, and the labour force participation rate also up at 61.7%, and the average earnings up at 0.4%. So that's a strong non-farm payroll number, ladies and gentlemen. That is a strong report from the jobs. So it's showing some robustness in the US jobs market. Now, obviously, this is cable here. We can see on this 5-minute chart here. We'll have a look at euro in a minute. As you can see, we went all the way down to 139.90, 38.90, and not 139.28 so far. So initial reaction was strong for the dollar. We're literally only 2 minutes into it, and now it's sort of just not really making its mind up. So that, you would argue, gives a threat of actual taper talk coming out at the Jackson Hole summit at the end of March. So that gives more ammunition to the hawks, really, that the jobs market is quite strong, and it's July as well. Remember, it's not a typically strong month for jobs, so that's a strong outlook. So that's strong, probably very dollar positive NFP, you would argue. And here we've been to 92.50 on the USD index, a new obviously high for the week, and it's trending high. So 92.50. It really needs to, dollar index, if we've got the daily time frame, you can see we need to break out of this level here. We're over the 20-day moving average here at 92.30 as of yesterday, today. So nice strong rally, but really need to get over 93, those highs we had in July, to take it higher. Otherwise, we're really in this channel bound, with 92 being our support, and really you could argue all the way to 93. So it's a big wide channel for dollar index there. So that's dollar index. So euro now starting to, or dollar starting to, the dollar's starting to pick up, or did pick up, cooling a wee bit, but you'd argue that could continue to the downside, because that's a strong number as well. Adi, I was asking what happened if euro data is negative or mixed. Thanks. Well, the data wasn't negative, Adi. The data is positive, and that should be, say, dollar positive. So that's why we've had this immediate move down. But that trend's been going on all day and indeed all week. This is the what's this? It's only a 5-minute chart. So if we go up to a higher time, say the 4-hour chart, you can see this has been tracking down really. Zoom up. Been tracking down all month, hasn't it? So a bit of a skirt up there. But 4-hour traders have been under their 4-hour. Their 20 period moving average from the announcement from Clarida. The surprise, that was Clarida's announcement there on Wednesday, and we've been tracking lower ever since. So 118's been breached at the moment. Next cluster support really takes us back to here, 117.70, round about here. These spikes, intraday spikes, but the end of close takes us out to 117.77. So 117.77 on an end of day basis might be another leg, and obviously that's a retrace of all of this last leg, so 100% out again from a Fibonacci point of view. From this rally from July to the high, we've probably already done. We must have done the where we are. Yeah, we've done the 61 levels of that last leg down there. We've already breached that yesterday, so that was a key week close yesterday. and then we've been down again today, 118.13, and that's we're moving down again. So there's a lot of fresh air under 118 for euro dollar traders, my friends. So let's just go back to what your requests are. If you want to look at some stuff, let's have a look at anybody. There's nobody else in Facebook for some reason. For some reason, we're not getting any Facebook participants here. Let me just reload that for you. No, I can't see anybody else. There's only 2 comments. There only seem to be 4 or 5 people there. That's a bit of a shame. Never mind. And more of you on YouTube. So welcome to your YouTube things. So let's go back to who asked first. So Gideon, you're asking about what would be the vision on gold. Well, gold, Gideon. Let's go back to gold. Gold. This is the 1 hour time frame. Let's zoom this in. Has been sort of tracking lower all week. We said 1 hour. So as you expect, dollars picked up on that data, and we're down. Big move down here in this 15-minute chart. So if we go up to the higher time frame, our support is at where we are now, really 1790. So we're now treading. What's that? That's we haven't been down here for a while. We haven't been down here for 23 days. So 23-day low for gold. Big down day at the moment because of that strong NFP number. Next support, I've got a line here at 1769.27. So 1770 next big major support for gold. But you see, it's very much again another one that's really sort of range bound. But it's is it going to break out of this range? Looked like it was going to break out to the upside a few times. 1930, 1935. $5 zone wasn't broken. This 1808, 1805, where we'd been pivoting around above the key 1800 had held for a while, but here we are now under 1800. So if we close under 1800 today, and indeed under this 1795 area where we are now, this next Fibonacci level down here, it's the 23 level. It's not perhaps as significant at 1790. That's negative for gold. Commodity markets have been very much under scrutiny about what's going on in China, although we've had a big rally in copper this morning. That was more to do with the threat of strikes in Chile. Chile, the world's biggest producer of copper. So threats of strikes there has brought the copper price up. But all the other commodities seem to be under pressure. So the long-term trend looks like it's starting to curl down if it breaks out of this range, Gideon. Certainly intraday, we've been moving down all week. That's the 4 hour and the 1 hour basis going back to here at the beginning of the week, at the end of the month. We've been tracking lower, haven't we? The spike. This is all to do with the ADP miss on Wednesday and then the hawkish Clarida. That was really the event of the week more so. At the moment, obviously it isn't over than the NFP number, but we're moving down here, 1790, gold continuing to move. Dr. Basant, good evening to you. Hope you're staying safe, my friend. I don't know if you're a cricket fan. The second day was a bit of a washout yesterday, but Jimmy took 4 wickets or 2 wickets in 2 balls. So the batting collapse of England on the first day. I don't know if they're playing today, but it's raining here, and I think it'll be raining in Nottingham as well. So anyway, Dr. Basant, we haven't talked about cricket before, have we? But cricket's one of my favourite sports of all. Ernest, what of pound will it be buy or sell? Well, pound should be under pressure as you can see the dollar's bid on that strong data. And there we go. That's a very volatile 5-minute chart. Let's go up a bit. But yeah, it's been, again, another one that's been drifting lower all week, really. Not exactly. Sorry, let's take this 4 hour time frame. And zoom up a bit. Sorry, it's the 4 hour time frame. As you can see, so range bound all week, basically. We want to break out at the top there, which it can't. And we don't want to go under 138.75, really. So that's your next support. We were today 139 is holding currently. We're just above that, but we can't move higher. So if I go into the 1 hour, we've actually held. Interestingly, sterling's held up against the dollar. So 139 is our support today. Resistance 139.37 from yesterday, or 139.30 really to the upside. I don't know what time frame you're trading at on, Ernest, but that's where we are. Lots of volatility. Obviously, if you've got positions open when NFP comes out, you need to make sure you've got enough margin and your stop losses aren't too close, or because it obviously is probably one of the most volatile, events of the month. So at the moment, it's dollar positive. A pair I don't look at that often, but one that's on our daily review, CAD Swiss for 6 GBPUSD. Sorry, excuse me. Let's have a look. That's Canadian pair. I don't know if I've got that here. Have I got Canadian dollars? No. Have I got it down here? I might have it already open. I'm not sure I have, to be honest. CAD Swiss, I don't think I have. If not, we can open it. CAD Swiss, CAD Yen. No, let's have a look at it. So let's file, new chart, Forex. Where are we? CAD Swiss. There it is, CAD Swiss. Let's put the same template on we've just been looking at. By the way, guys, if you want me to change template, put some other indicators on, or put no indicators on, change the background color, let me know. I always default to this. I'm a trend following sort of guy, so I always default to this crossing EMA setup here with the parabol, with the MACD and the RSI down here in the ATR. So CAD Swiss on the 1 hour time frame, GBP is bid. It's had a strong day yesterday. It's followed through today. 72.60. Our high for yesterday and our resistance sits at 72.67. Looks like we've nearly tested that already today, but this is the 20-hour moving average, or the 21 EMA. So that broke higher again on Wednesday, courtesy of Mr. Clarida, and it's been bid ever since. So that's a nice rallying trend in there, out there, in again, out. Could have got back in again today, and that's moving up. So 7.7268 is your next target to the upside. Support is here. It depends how close you want to trail your support, but if I zoom this up, there we go, zoom this up a bit. Your stop loss now is probably, if you've been trailing this up, your stop loss is probably around here. You might have actually been stopped out because of that volatility. Yeah, you might have tested it. Depends how close you got to it, but that's still relatively well bid. It's obviously got a volatile hour currently because of non-farm payroll, but let me know what time frame you're trading it. But that 1 hour is up. We got to the 4 hour. That's also bid. The 4 hour went long a bit later on this strategy. That went long on the 5th overnight as Clarida's comments fell through. But again, that remains bid. And the 4 hour target would take you up to that top of that candle there, which takes to 72.86 from here. So 72.67 and then 72.86 in the higher time frames for CAD Swiss. And if we go up another one, we go up to the daily. The daily has been short from the beginning of July. Yeah, July all the way down. And it looks like it's found a floor and it's ticking up. But you're still short here because maybe closing it out today because we're back over this 9 period from that there. So you'd have been out flat. So daily's still short. 4 hours gone long, did we say? Yeah, 4 hours went long earlier, and 1 hour went long on Wednesday as well. So tell me your time frame, Guelp, or if that's enough, please let me know as well. So let's have a look. Addy, we saw the euro. We talked about the negative data. See what we saw the euro. Go back to the beginning. Euro. Let's go back to. I don't know what time frame you're trading, my friend, but 30-minute chart, yeah, down. We're way under that 1800 level now, so it's 117.85. So again, it's ticking, continues to tick lower. Sajid's asked about cable and the dollar CAD. I forgot to say that obviously the Canadian jobs number was out. So Saj, let's just go back to the Canadian data. So the Canadian data, on the other hand, was actually weak. It missed expectations. The net gain employment in Canada was 94,000. It was expected to be about 178,000. So that's missed. Unemployment in Canada has also missed. It's ticked up rather than ticking down. It was 7.8% last month. It's gone down to 7.5%, but was expected to go to 7.4%. So that's the pair to trade today. We haven't actually looked at it yet, but we've had a strong positive, dollar positive numbers for the US dollar and weak numbers for the loonie because the net change was missed expectations. Average wages went up quite significantly though in Canada, so those that have got jobs maybe getting paid better, but the participation rate went up. So there's obviously a lot of cheap, relatively poorly paid workers going back to the Canadian jobs market, but certainly not as much as many was expecting. So you would expect dollar CAD to have benefited the US dollar. So you would be expecting this chart to have bounced up, and indeed there it is. It was finding some support at 125, having moved down Thursday and Wednesday from this 125.76 high. This was before Clarida spoke. So we got there, or as Clarida spoke there, 125.75. So that's the next real upside target there for 1 hour traders. Next one was the high here at 125.50. So we're currently trading at 125.25 with 125 as the support. And yesterday's low looks like a bit oversold there. MACD's looking to break the zero line there as the signal line nicely under the histograms. Histograms want to flip above, but it hasn't yet on that 1 hour time frame. 4 hour still remains relatively negative, but again, that 125.50 is next upside target, Khan, my friend. That's still, but again, another example of a range-bound market for dollar CAD. So that's our top 125.50. Our floor down here, 124.80, just 20 pips below the 125. But really, you could probably bring it up to that 125.90 level, split the difference. And that's where your support would be through there on an end-of-day basis. So Guap's saying he's trading CAD on a 1 hour. Okay, my friend. Well, we said that was long, didn't we? I think, didn't we? Let's have a look. What do you think, my friends? I would just not, I can't tell you what to do or advise you what to do, but I'm just literally repeating what the chart analysis is telling me. So here, there's that support, 72.50, 1 hour. This is 1 hour, isn't it? Yeah, 1 hour. Really, it needs to break this 72.68 level from the highs here, but really you can see here the end of the hour time frame. We're already right at it where we are now at 72.62. So that's a key resistance on an end of hour basis, if you're trading it on an end of hours. And this intra-hour spike is that a bit higher. So it may be stalling or struggling at this level, but it's still sort of ticking up to the upside. Okay. CAD, we didn't. Did I do CAD? Yeah, we did do CAD, didn't we? Yes, we did talk about the USD CAD for Khan. This one wasn't before. I showed the channel bound we've been in during August, or so far in August, and the dip down from June and July from these highs up here at 127.80. So 125 is our floor, 125.75 or 125.50 is our first resistance for dollar CAD on the higher time frames. Anybody else? Yeah, that's still supported. I say again, I don't know how you trade this, but on my time frame, that 20-hour moving average, that purple line was providing some key support as we went forward. For somebody over on Forex King, he calls himself, or she calls themselves. Is gold a buy? Well, not on that. Not what we saw earlier, didn't it? Gold looks like to be tanking, and it's tanked again. 1778. Gold can move very aggressively on a Friday, and not necessarily an NFP Friday, but as you can see, the NFP data at the moment, it's far from over, is having a bigger impact on the gold market than the Clarida hawkish comments that lifted the dollar. So commodities in the wider context are a bit under pressure. Let me show you my commodities profiles, and you'll see what I'm talking about. This is copper having a big leap up today. We just let me just tile the window. So this is gold, silver, oil, copper, UK oil, and palladium on the daily basis. You can see a bit of a quiet July, and now down today. This is gold, which you just looked at. You can see silver's been tracking lower all of June and July, and here we are at 24.62 from that big spike we had to 30 earlier in the year as well. Remember, copper's been, on the other hand, been moving up, having moved down. And it's tanked down today on that worry about the. It's moved down on the strength of the dollar now. That's a no. strength of the dollar now, having moved up because of that strike threat in Chile earlier this morning. So we'd moved up about nearly 1% at one. Well, we must have gone up over 1% because we went to 4.4. We were up 85.85 of 1% earlier on the copper market. So that's reversing that as the stronger dollars playing out today. Now I won't look at palladium. You were talking about gold, weren't you? So this is gold on the daily basis. So we've had this big rally up, and this is where that next. This is the daily basis. So that's where a key support sits now. This leg up, and then we had a leg down. And so 61.8 of that leg up here from April and May, this big move up when we went from all the way down here at 1680, all the way up to 1915. So that next support sits at 1765. So there's a key Fibonacci level there at 1765, Forex King. And we've gapped and moved down quite aggressively already today. So that's the big support, 1765. That Fibonacci level. If we put another little Fibonacci level in here, you'll see some sort of clustering to the upside. So this is a key support level now. Because this was a 61 level of this rally. That was a retrace, which we retraced to quite nicely here at the end of June, and then we bounced off it, but we haven't bounced off it very much. It's probably a wee bit too early to say that that's the next leg. But if we did that, assuming that that's our low here, we can see how that then gives us that level 1765, a little simple Fibonacci level, possibly 1750. See how it's rounded up, and the extension of this retrace leg would take us further down to 1700 itself. So three key levels there on Fibonacci for the gold market: 1765 from way back earlier in the year in April. 1750 from this dip down the low we had in June, and 1700, which again takes us all the way back to March and the spring, and then below that was this low at 1680, this low for the year around 1680. So some key levels to the downside for gold if this day continues, and we close this day out. Too early to say if that's going to be the case, but that looks pretty negative for the day, doesn't it? So that's gold Forex on my friend. It doesn't look like a buy to me on that time frame. That's certainly the 4 hour has moves very aggressively, and it's been short all week really, short most of the month. 1 hour, as you can see, very exaggerated move. So I don't try and catch a falling knife, I would say, Forex King. It may look oversold, and indeed it probably is significantly oversold. RSI is at 19 now, but that's moving lower. The sellers on gold and buys for the dollar, so that's only going in one direction currently. So that's gold, and most of the other commodities are under the same sort of pressure. Quite asking, what's your thoughts on pound yen? I'm in a position also. Pound yen. Let's have a look at the pound crosses. Sterling is relatively bid, so it's relatively supported on the back of good vaccination rates in the UK. 80-odd%, 81, 82% of people have had at least one vaccination, and 70-odd% have had two vaccinations. The feel-good factor in the UK is back because Scotland opens up fully on the 9th, of Monday. England opened up on the 19th of July. I know this is sounds a bit naff, but they're doing very, very well at the Olympics as well, and that gives a feeling of positivity around the streets when people are back out. So people might put their hand in their pocket and buy the extra meal out, or buy the extra beer when they're out enjoying things. If the general mood in the country is up a tad. Obviously, that's a bit of a throwaway remark, but that's all sort of thing. It gets put into the mix. So if we look at the sterling crosses, we have British pound. Look at the sterling cross. You see they're all relatively well bid. This is obviously intraday, but you can see this. This is pound Oz up relatively, pound CAD up. This is the weekly basis. Pound yen on a daily basis, which is what you wanted to look at, up. As you can see, moving up against the dollar, sideways against the yen, but. So here, this is pound yen, some analysis we did a while ago. So key resistance at 155. That's obviously a long way away from where we are now. We're at 153, or just breached 153 today. So that looks like that's had its not nice, but it's had a run and trend down into this support zone here at 140, under 149. Classic little pivot turn here. Doji candle, big candle down, engulfing candle up. That wasn't necessarily positive. Moved up, couldn't break 153, lipped down again, and now it needs to break up. So into the end of July. So again, at the moment, it's that summer sort of doldrums, if you like, but the floor is being lifted. So support now on the daily sits through there at around 151.65. And interestingly, yesterday we closed above. There we are. That previous high, all right, just above. It wasn't much, but it was enough. 152.80 was just above the close of that high we'd had at the end of July. So that's a positive, and that's followed through today. So a break of 153, and as you can see, there's a lot of sort of black space up here. So as we looped down, the low was getting lower, and the highs were getting lower. It's a bit messy. We've rallied up, we've retraced, we've rallied up. So we need to break 153, and then we could perhaps run to 155 on a higher time frame. Guop. Again, I don't know what position, how you're trading that. You said you were 1 hour on the CAD. Did you say you were 1 hour on the CAD yen? Let me have a look. So let's go down. So it's a positive day yesterday. That would have taken you long on this strategy, although you'd been short here, got long, got stopped out. You'd gone long again yesterday on an end of day basis. The 4 hour trader would have gone, he'd been short there, turned it around and then gone long here. He'd have gone long there yesterday. No, the 4th at 8 o'clock. And he's been long ever since. It's sort of held and running. So he's still running. Again, you can see there on the 4 hour basis, next resistance sits through there at 153.27 from, was that just yesterday? No, what am I talking about? That was back at 29th of July. So 153.27 for 4 hour traders. And for 1 hour traders, it's been a bit more choppy, but again, long here on Wednesday, courtesy of Clarida. And that 20, you can see the 20 hour, the purple line here, the 20 hour moving average has supported you for the rest of Wednesday, all of Thursday. We dipped to test it before NFP today, but that's our support on the 1 hour time frame. Just below that 152.80 is at 152.70, so quite tight range there for a big moving pair, and now a strong pound yen having broken out. So that looks like a breakout in the next couple of minutes. If that finishes, that's a very positive candle, breaking above 152.95. There we go. There you can see that for pound against the yen. That's a proper little breakout occurring there, supported by the 20-hour moving average, running into the end of the week. Remember, most Japanese traders are fast asleep now, or enjoying their Friday night, or enjoying their Olympics. No, whatever's, yeah. The Brits are certainly enjoying the Olympics, as I said earlier, but obviously the London session has still got a few hours to go. So that's positive for pound yen at the moment. Big breakout candle here on this 1 hour time frame, which is still got 2 minutes to run. But yes, if you're long pound yen for now, yeah, that's pretty good. I don't know where you got in, but it's broken out. You'd like to see it hold over that 152.95. Call it 153 for round numbers, certainly on an end of day basis. But that looks very positive as well, my friend. Anybody else? There we go. We've only been here 40 minutes, so I'm happy to keep going. Let me go back to Facebook, friends, see if anybody's come on. Unfortunately, I can't share my Facebook questions here. The way we do this streaming. Let's have a look. No, I've only got 4 comments. Nobody's here. There's 50 of you there on Facebook. You're all being a bit quiet. Okay, let's go back here. Any more comments from YouTube, guys? No. Okay, what was that? That was pound yen. So let's just minimize that. As I say, let me just finish my story on sterling generally. See how it's, this is sterling against the Aussie. This first one here, you can see it's bid. Sterling against Swissy, not so much so. It's down. Sterling yen had been down, but it looks like we're turning up, doesn't it? It looks like we might be turning up here in this first couple of weeks of or today, in fact. So it's a good day for sterling. You see the day that's the Swiss one, just broke over the 20 period moving average. Broke it yesterday on the yen. Broke it earlier in, this is the weekly, sorry, for the CAD. So again, it's bid here. It's over that. That was middle of June. In fact, that's a long run, isn't it? Sorry, that's July. So sterling up against CAD. Let's say up against the yen here. So it's had a good week, sterling again. And here on the daily against the dollar, this one down here, you can see, although the dollar's got strong this week, sterling still bid. That's the 20-day moving average for the cable pair down there at 138.60. But again, range bound, as you see, this is on a daily basis. Needs to break up, as you said earlier. 139 is the key support moving forward. Jermaine, bond and strong data from US, but the Dixie not showing proportionate move. Any reason? Remember with the Dixie, Jermaine, what it is? It's a composite. It's a very tightly narrow range weighted index. 60%, 50 odd percent, I should say, of that index is created by the euro. So the euro is relatively weak. So I would have thought, we haven't looked at the dollar index, it would have moved, certainly should have moved to the upside, perhaps not as much. It doesn't move as much as some of the other currency pairs, but it's a good handle for the overall strength or weakness of the dollar. But you would expect, I would expect it to be moving up. So let's have a look, dollar index. Where's my... the wrong one because I've got another dollar index on here. Oh, I've gone the wrong way. I always go the wrong way. I've gone backwards instead of forwards. I need to go forwards. Right, so dollar index is big. This is the 1 hour chart. I mean, that's a fairly hefty move, my friend, on a daily basis. Oh, I haven't got it here. I thought I did have it here, but no, I must have moved it or got rid of it. So let me zoom up. So daily, key break of the 21 hour or 21 EMA, they've been flat. It's not been much going on, but that's a fairly hefty move today. Certainly, I appreciate you might be trading it on the 5 minute or the 15 minute, but here, 15-minute traders are pretty happy. That's the news. It's breached out. It's broken this range. It's been bid all morning. So I'm not quite sure what your issue is. Oh, is it the fact that you think it would have moved more than it has? Well, that's fair enough, I suppose. No, there's no reason, Jermaine. But you can see, again, I don't know what time frame you're trading on, but consolidation, leap up, that would have got me in here earlier. If I was trading this, that's a big candle. It's broken that range, 11.15, and we've traded higher all of a sudden. Might have cashed out a bit here before the numbers come out. Thanks very much. Back in, because that's a big strong candle. 15 minutes after the event, and we still moved up, so my stop loss could be down here somewhere, but that's moving higher, my friend. 59.60, 92.60 at the moment, or 92.59. That's still bid. I wouldn't worry about it moving enough. It's certainly moved up. I don't know what the I haven't got a let me move that down. I haven't got a treasury number here. Let me just find the... I haven't got the treasuries, but I've got the treasury. I haven't got the yield numbers here. The US treasury, obviously, yields have picked up as the prices come down. So prices under 134. So 10-year dollar price for a 10-year yield is now under 134 for the first time in a long time. When we were last down here, so yields have obviously ticked up today. So this is the price of treasuries are down under 134 for a I don't know what's that, 10 day, 11, 12 day low. So yields must have ticked up. I say I haven't got a yield feed here, Stefano, but yeah, it's been a dollar strong non-farm payroll. And just summarising, guys. Unless anybody's got anything else, let me just bring my default charts back up. Just to summarise, that was a big beat. We had 934,000. Let me just find the numbers again. In fact, I'm bringing it in here, can't I? You can see them, hopefully. Can you see that? I think you can, can't you? I think I'm sharing the whole thing. There we go. This is our economics page. So you can see we've got 943,000 for non-farm payroll. There's the numbers here. Unemployment rate down to 4.5%. The wider unemployment, we were worried about it going back over 10%. It was 9.2%. Participation rate just a tick higher than expected, but still better. Earnings much better. Well, not, again, a tick better, but again, better could have been worse. The previous has been revised up as well. The previous has been revised up for the annualized earnings, 4% this month, 3.7% from 3.6% last month. And the interestingly, the numbers were revised up as well. So it's the revisions are positive. The headline initial numbers are all positive. So that's a really strong, about as strong as you could expect, non-farm payroll for the United States. Hence the dollar strength. Dollar index at 92.60, euro at 17.80, dollar yen. Nobody's asked about dollar yen today, but dollar yen over one. There we go. Dollar yen spiking higher over that 110, taking us all the way back to the 28th of July highs. Have we got to there already? 110.20. It's the next line in the sand for dollar yen. Sterling back on under 139. So sterling's holding up as we just saw. Sterling's relatively well bid. So sterling at 139.38.95. CAD, dollar CAD, because we had that weak data from Canada, the unemployment numbers missed. So again, a big rally off, but again, not perhaps as big as you might expect, off 125 because of the unwind in the oil market as well. So dollar CAD struggling to get over 125.25 basically, and then 125.50. We talked about this earlier, didn't we? And then 125.75. They're the upside targets for dollar CAD. Downside is obviously that support at 125, and then yesterday's low at 124.80, but that's going to be tested. Aussie was under 74 earlier this morning. We're at 73.70, so a low for certainly today and yesterday, and Wednesday's low. Further downside for the Australian dollar, support sits at 73.62 from Wednesday, and that cluster there takes back to Tuesday. And the beginning of the month and the beginning of the week, we went all the way down to 73.28. So that's our support levels for the Australian dollar. Gold we looked at. Oil. Nobody's asked about oil. Not many people asked about oil. I don't know why, because oil's a great trader. Back up again. Yesterday we spiked down here to 67.60. So a big collapse in oil prices this week. From $73 plus this time last week, 70.35 we were this time last week, all the way up here, and a huge, massive percentage move down. That's just follow the trend. That's gone down, and then yesterday we've turned up, and now we're back over the 20-hour moving average into close yesterday and all of today. So $70, the next target for US oil traders. FTSE, not the FTSE, the S&P 500. See how that? We haven't looked at equities. No, we asked about equities. But here, pushing. This is the 1 hour time frame, so pushing intraday all-time highs. Here, there, 44.28.94. The markets are still 25 minutes from the cash open, but that's been positive. For equity markets as well. As I said before, any dips have been bought, and again on this particular strategy, the 1 hour trade has been long from the middle of yesterday, really trending that higher, and remains long so far. Going into the cash open, Jermaine, that's not a problem, my friend. Excuse me. So I'm going to wrap it up, guys, because there's no more questions, and my voice is about to go. So strong day for the dollar. Actually, let me just finish with the VIX. See what the VIX is doing, because the VIX has been a bit weakening. Remember, the VIX is the volatility index, and we're sort of stepping down. Let's see what's a bit. Yeah, so I'm getting a bit cautious under its 20-day moving average for the first time since the middle of July. Interestingly, so that's potentially bullish as well. As the VIX moves down, certainly got some legs to move. So 18, 17 could be quite quickly taken. So again, that's the VIX, the volatility index, triggered lower yesterday. So 19 we sit at the moment. Or was that? Actually, that was the 5th, wasn't it? That's today, isn't it? Yeah. Let's zoom. Go into the intraday action on the VIX. That was yesterday on the end of day. No, it wasn't. Why has it put it in there? I don't know. Anyway, short on the end of day, and we've moved down again. So we closed at 19.28, and we're currently under 19 as well. So that's heading lower as well. So that's supportive of the equity markets as well. So we could be seeing expect to see new all-time highs today on the equity markets as they open in about half an hour. One would potentially expect. We'll see. Nasdaq. I know you all love the Nasdaq. We're back over 15,000 yesterday. Zoom up. Let me zoom in. Zoom up. There we are. There's the key 15,000 level. We dipped down earlier in the week, but we've been over it for all of August so far. And yesterday, another all-time high at close for the Nasdaq, and it continues to be bid, just like we saw with the S&P 500. Any dips down have been bought and bought quite aggressively. So a strong June and July for the Nasdaq, and August is continuing higher. So the trend, my friend, is to the upside still on the equity markets, the key technology equity markets as well. So if there's nothing else, everybody, I'm going to call it a day. I'm on leave when we close business today, so I won't be around for a week. Andrew will obviously be with you next week, and then Andrew's off the week after that. So I'll see you back on the screens and on the keyboard on Monday, the 16th of August. Until then, take care, everyone. Stay safe, and if you get offered the vaccine, in my humble opinion, I'm no doctor, but take it, guys. Honestly, stay safe. And we'll see you all again soon, sometime. And all the best to you and your family. So all the best, everyone. Bye-bye.